Hello, once again, I'm BR Schultz. Thank you for joining me for another BR Schultz SP500 episode on YouTube. And the model hit 5 for 5 in January with the run-up in the markets here on January 31st, with the February 3rd peak being plus or minus one business day. We're seeing strength into the January 31st time frame, which is minus one business day from the February 3rd date. So the model gets the accuracy hit. Even if markets trickle a little higher into the 5th or whatnot, the model would still get it. And then call number 6 will be February 6th bottom or low, plus or minus one business day. And then from there, we'll go up into the CPI date, I believe, for the peak, I think, which will be roughly February 11th. They come out with CPI on the 12th, I think, the morning of the 12th. So I think, if I remember correctly from my model, we're looking for a peak around the 11th. At least I think that'll be like the official date, plus or minus one business day. Obviously, that would encompass the CPI release at 8:30 on February 12th morning. So thanks for joining me. Thanks for all the donations. Thank you for subscribing. It means the world to me. A few donations came in today, so I always appreciate it when the call comes through to fruition. When donations come on that date, that's pretty cool. Or within this win window, it's always very kind of you, so appreciate it. And yeah, so everyone that's donated over the past week or so, as they've watched the performance, thank you so much. Yesterday was a really fun trading day, basically hitting the highs and lows with different calls, and every time the market would drop yesterday on January 30th, I remember buying calls, and I think since the last video, I hit like three in a row with option calls, option plays. It was a lot of fun. And so I'm like 50% all in short here at 61.10 on the SP500 USD here around lunchtime of on January 31st. And so then obviously I'll be looking to close my shorts around February 5th or 6th or 7th, assuming we hit that window for the low. And now I will show you the model that supports that. The gold wave, right? We want to see the gold wave say that. So thank you so much for joining me. If you haven't subscribed, please consider it. Again, I want to go solo on this eventually over time. So my 3 to 5 year goal is to go solo. So if you want to help me reach my donation goal of $100,000 a year USD, then feel free to donate. I'm not asking for huge donations. $2, $4, $6, $7, $8, $10. I don't care. It's always just nice to be cheered on. Obviously, the big players, yeah, there'll always be a few big players that donate pretty generously. So I very much appreciate all size gifts, because I realize it's every aspect that makes the game fun, right? You can't just have 5 people in the stands, and that's the beauty of the arena, right? All the seats fill up for the Michael Jordan games, from the top to the bottom. So every fan is important. So thank you for joining me. Thank you for loving my work. Thank you for following my work. And the biggest accolade you can give me is sharing my work. So yeah, if you know 10 to 12, 13 people that you think would enjoy my work, please share my work with them. All right, let's move on to the graphs. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. So a little recap on the peak. We had the 1, 2, 3, 4 on the gold wave going into February 3rd, plus or minus one business day. So the gold wave is very important for determining the peak of the markets. I guess if we go sideways here into the 3rd, you know, the model gets 2 hole in ones in a row, because it predicted the January 27th bottom and a February 3rd peak. So yeah, so I feel like we're getting close to that peak time from the gold wave perspective. So let's move on to the next low. This is a little bit of a trick shot, if you will. You have the 1, 2 in the gold wave back in what is that, late October, early November on the 5-minute model, and then basically you're using the top of the green wave. The green wave is what I consider like a secondary version of the gold wave. So you have a 1, 2, 3 here, and that would take you out to roughly February 6th from the February 3rd peak time frame. So I expect that we'll start at some point. We'll drop down into around the February 6th bottom, plus or minus one business day. You can see it's kind of picking out the very end of February 6th, so obviously that can bleed into February 7th for the low, or even late day February 5th. And then some of you that followed my work yesterday noticed that like at the 10-hour window from the February 3rd peak prediction, so that's about a day and a half business days, notice that like that's where the market's bottomed. So it seems that on the gold wave for its peak or its low, it starts about a day and a half prior to the forecasted pivot date. So that can also kind of give you some type of maybe relevance in seeing if my model is right or wrong, or if it's off a little bit. Maybe if we don't start bottoming until a half a day before my model's prediction, maybe you know that it could go into the last the +1 deviation, so to speak, from the original date. It depends on where that bottom or that peak starts to shake out. You kind of get a day and a half. It would seem to 2 days to 2.5 days of strength or selling off. So that would make sense from the February 3rd peak to the February 6th. You get about 3 business days from there. That's that window. So that would make sense for that window for about 3 day sell off, and then up until the 11th, maybe 12th, and then we could have some fun. We'll see if if the model's set up for a big sell off into that that mid-March or late March bottom that I've been waiting for. And yeah, so this is the model for today. Again, the gold wave is involved here, and yeah, so peak on the February 3rd and then low on February 6th, plus or minus one business day, is call number 6. Thank you for joining me today. I'm BR Schultz. Oh yeah, and then that little white line that you're seeing on the screen, basically you have the 1, 2, 3 and it crossed the original top black line. If you drop that line straight down, you'll see it picked out roughly January 2nd. So with the lag in the model, you can't always see the green wave firm up until later. But now that time has passed and obviously the averaging has smoothed out for that time frame, you can see how the 1, 2, 3 touch point from the 2 gold and the 1 green top predicted that there'd be a bottom around late day January 2nd, and then obviously it would be like an echo bottom from the January 2nd bottom to February 6th. You can kind of see how those two would be related, and yeah. That's it for today. I leave all the last 2 slides in here all the time. Obviously, I think the market has a good chance of really rocketing up for about 2.5 to 3 years after the March 21st, 2025 bottom in markets. So again, I think we stay choppy into that time, maybe even finally get a sell-off after the CPI read. And I think by the Fed holding rates steady, I think they're showing that rates are hot, and I think therefore they're kind of getting an early read on CPI. And so I think they kind of gave us a heads up that CPI could be bad and it could tank the market. So that's how I read the Fed's last movement just before the reading in mid-February. So hopefully we have a nice bottom around February 6th. I was contemplating just not labeling February 6th, not making it one of my official calls, just because I don't see like 3 touch points on the gold wave. And sometimes wave 4 down in like a 5-wave move structure, wave 4 down is a gentle or small wave down. So maybe we only drop 100 points between the peak here on February 3rd into the bottom on February 6th. So we could have like some type of very volatile movement, right? You could drop 50, pop 50, drop 50, pop 50, just kind of like what we saw yesterday. You can see these wild swings as markets try to find their bottom into February 6th. So you could have 50-point, 70-point swings between the peak here and then the bottom on Feb 6th, which has kind of been the norm lately. So if we see the market drop 70, 80 points, I might exit all my shorts, and then if it pops again up 50, 60, 70 points, then obviously I might go short again. Play it from that perspective. That's how these swings kind of work out. Is it seems that they have these five wave movements on a smaller scale into their final arrival at the date. So that's how markets work usually. I think they it has this 5-wave structure move from the peak here into February 6th. So I think you should be able to track that like on a 2-hour or 4-hour scale, maybe a 3-hour scale on tradingview.com. SP500 USD is all I use for my trading. And the data that goes into the models you see on the screen is the daily data. So that would be your CNBC normal index value that you see during your lunchtime or your dinner time or whatever the business day is here in America. It's from 9:30 to 4 my time. So that's what the data is that's going into the model that you see on the screen. But for trading purposes, I watch the SP500 USD because it's the continuous futures contract, and then you can kind of see the swing from yesterday's low to today's high, or yesterday's high from today's low, and measure, down 50, 60, 70, or up 50, 60, 70, 100, so I can make my trade. That's how I trade, and I have an extensive moving average system. And I've thought about it. If if donations get rather generous at some point, maybe I start sharing more about my moving average system in my presentations. I'm sure there's quite a few of you that want to see my moving average system, want me to explain it to you. I'm sure there's a lot of people, like my critics, that would love to steal my work from my moving average system. They go on TradingView probably and try to mimic my work. That's cool. I don't care. Some of my friends and my close followers try to do the same thing, so I expect that to be done. And people try to copy my work, or my moving average system, so that they can make good use of it as well. But if you want to see that come about, share my work. Obviously, more people that get involved in donating, things like that, donations start flushing in quite a bit. If I get 20, 30, 40, 50 donations in a day, even if they're all $1 each, let's say, then obviously I can start giving more information out about maybe my own personal swing trade timing system on TradingView. But obviously, I'd like to see that happen when there's a big crowd. There's an excitement there. So that's only if a lot of donations start flowing in. A lot, the crowd gets bigger and bigger. Maybe we get up to 3,400 followers on YouTube, or maybe 5,100. I like 17, 34, 51, stuff like that. So yeah, if we get up to 3,400 to 5,000, maybe I start to try to branch out, show you maybe the S&P graphs in my videos. Some people have asked for that, to show me a visual on the videos. I want to make it simple right now because I want to put in the least amount of time I can until I get a great number of followers. And then obviously, as it progresses more towards maybe me going solo, then maybe I'll be more generous and try to really make it an all-out presentation, right? So that it's all inclusive, and that you really see the full spectrum of everything I'm seeing. But right now, this is the trial view, right? And in the trial portion of the subscription or whatever, when you subscribe to something, they kind of give you the trial, the 7-day trial period, right? Well, this is just the sampler, if you were, the appetizer. And then, like I said, if donations keep growing and growing and growing and bigger and bigger and bigger, and so do subscribers on my YouTube channel, then maybe I'll keep making my presentations bigger and bigger and bigger, more data robust, if you will, and give you more of the SP500 USD moving averages from the 4-hour, 1-hour daily perspective that I use. Yes, a few cheat codes, if you will, at least from my perspective. And maybe when you find them out, you don't think they're that cheat codes at all. But you can always look for my work on brschultzSP500 on tradingview.com, and you can go look at my posts, and you can actually view my moving averages if you'd like. So thank you for joining me today, and we'll hopefully see you at the bottom on February 6th. Take care. Bye. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low, with a zigzag, a 1, 2, 3 touch point, brschultzSP500 systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A
a
licensed Investment
professional.
That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial.
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm BR Schultz. Until next time, take care.